So we look at this UPS results. UPS tends to be seen as an economic bellwether. Is that still the case with all this sort of Teamsters noise? What can we take away from these numbers?
Yeah, Julie, I think it is a little bit concerning about what's going on with the consumer. I mean, yes, we have the situation where they blame most of it on this new contract, but on a on a macro basis, that's not all that great because we worry more about wage inflation and what does that mean for the Fed, and will they keep rates higher for longer, even if they're going to stop, or even if they've already stopped cutting rates. But on the consumer side of things, as you said, the demand was down, revenues are down. I mean, we can talk about their margins might get hurt because of the higher wages, but if revenues are down, revenues aren't impacted by wages, and that tells us that maybe the consumer is starting to pull in their hands. I mean, we saw some news out last week on the domestic travel side from JetBlue, and even though people are going overseas and they're spending time in restaurants and the experiences, they seem to be pulling their hands, pulling their horns in a little bit, and that does get me a little bit concerned, given how important the consumer is for our economy.
Matt, let's stay overseas for a hot second here, because when we think about that international impact that the company talked about in this quarter, saying that the revenue decreased 13%, primarily driven by a 6.6% reduction in average daily volume and continued softness on Asia trade lanes. How much longer do you think that could continue to be a headwind for this company?
Well, I mean, the problem we have is that the slowdown that we've seen in other parts of the world. I mean, Europe seems to be stabilizing, but Asia certainly not. And we got some more news, of course, out of China on their trade numbers that are very concerning, and that of course spills over to the rest of Asia. And with the again this whole idea that we've been harping on for most of this year, that people are spending less money on stuff and more money on experiences. Well, that's fine, but if the experiences are starting to pull back a little bit, and we've already have a problem with people buying material items, that again creates the kind of headwinds that we don't want to see in an economy here that is based 70% based on the U.S. consumer.
At the same time, how should we be thinking about the U.S. consumer? Because as you said, there has been this shift to services from stuff, and yet then you had Amazon, whose stuff is selling pretty well. So it feels like I don't know, it's a little murky right now.
Yeah, no question, Julie. It's not like we're looking at the consumer suddenly imploding, but we do have the. We're just getting a lot of mixed signals. Amazon's been pretty good, but you see what the retailers did in when they reported earnings last time. They have yet to report yet. We'll see. We'll hear from them in the future here. But their stocks have obviously got pummeled real hard during the last earnings cycle, and of course their guidance wasn't very good either. Their stocks have bounced back a little bit, but that I think seems to be more technical in nature. And again, the concern is not so much that the consumer is going to implode, but it does start to soften with credit card debt at all-time highs and savings rate having come down from the level we saw at the pandemic. I mean, are they going to be strong enough to fuel further gains going forward?
Matt, you mentioned a moment ago how much UPS had kind of leaned into what the negotiations had been like with the Teamsters, how that played out, what that means for the guidance going forward here. Is there anything and this has been a big year for some larger union negotiations, is there anything that we can extrapolate from what UPS and their own negotiations look like and apply that to some of the other kind of employment situation and union negotiations that are still moving forward?
Well, there's no question we're seeing it. The unions and workers overall have more leverage than they used to have, and it's whether you see it in restaurants. We've been talking about it for a couple of years now. Well, now these union contracts, which obviously involve tens of thousands of people, are coming to a head. And look what happened with the pilots unions. You're getting 40% increases. Mm-hmm. These are very significant, and at some point it's going to have an impact on margins. And the biggest thing we keep talking about, we're going to be able to avoid a recession. That's great, but if earnings don't increase going forward, and with those margins being compressed, if earnings can't increase, that's going to be again make it tougher for the stock market to rally as strongly as it has so far this year.